Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is January 3rd, 2023. Yes, a new trading year has begun, and with that, I hope that you have great success in your trading. You learn a lot, hopefully, from things like this video and from what you read at ForexLive.com, and guides you in the proper direction, and that you and your family have good health, you have good you have joy, happiness, and peace in your life. So with that said, let's start off by taking a look at the euro versus US dollar. I'm going to start off by taking a look at the daily chart here, and what we see off the daily chart is that the euro versus US dollar has moved sharply lower on the the second trading day of the year. We actually did have price action yesterday, of course. Forex market never sleeps, but it does sort of on the weekends. But it was open yesterday, and so we did see a little bit of decline in trading yesterday. In today's trading, we saw a further decline, and that decline came right down to test the 50% midpoint of the move down from the 2022 high to the 2022 low. We've been talking about this level for a while. We traded above and below it during the early part of December before moving to the upside, and stayed above that level. This other swing area through here between the 1.0594 and 1.0640 was a level that also attracted some up and down price action as the market sort of consolidated into the year end. But here we have a new trading year, and we're seeing increased activity, a movement by traders to the downside. But we did find support against that 50% retracement level, and that's going to be a barometer for our trading here today. As long as the price can remain above that, then the buyers are still sort of they are in play, at least on the daily chart here. But they would have some work to do, and that work would manifest itself and show itself off the hourly chart, because off the hourly chart we saw the sharp move to the downside here, take the price back below the 100 and 200 hour moving averages. That's the blue and green lines in these charts, and that opened up the door for further selling momentum. You can see it was straight down, down, down goes Fraser. Contributing to it, German preliminary CPI came in weaker than expectations. That helped to move the euro versus US dollar to the downside. Also increased hopes of lower inflation as a result of natural gas. They've been having unusually warm weather in Europe, and that is helping them get through the winter that everyone feared, and that may also be contributing to the downside momentum here for the euro versus US dollar. Technically, these early levels in December that we used in our analysis last month, right through here between the 1.0584 and 1.0594 were levels of significance for a lot of last year. Admittedly, we went below it, this day through in the month of December. But again, we were in this choppy up and down end of year type of let's get to the finish line type of trading. But getting back below that level, it also represents a 50% retracement of this last move to the upside. Getting below that area is the target that we look on the top side to give us some shorter term clues as far as the market momentum to start the trading year. If the market is able to stay below that 50% retracement, stay below the swing area through here, I think that the sellers remain in control in the short term with the 50% on the daily chart as the bias or the level that needs to get through on the downside in order to increase that bearish bias. So watch this area right through here where we have that 50% retracement, those swing areas through here, to see if the price can stay below it. If the price can stay below it, then on this corrective movement, you could see that we are seeing a correction more to the upside in the early New York trading. We could see a rotation back to the downside here. As the sellers take more control at the start of the new year. If the market is able to get above this area, then the market becomes a little bit more balanced, and we'd have to see what the price action does and to see what the momentum does above that 50% retracement level. But I would consider this area right through here the key area for us in trading going forward in the short term for the euro versus US dollar. Let's take a look at the dollar versus yen next, and we'll start off by taking a look at the hourly or the daily chart as well. And what we saw in trading in trading yesterday was a move down to test the low price from this point right here. This is going back to August of 2022. Level came in at 130.38, and the low price yesterday reached 135.96. But in trading here today, you can see the price moved below that level and reached all the way down to a low of 129.49.8. That was a significant break, but as you can see, we are seeing a rebound back to the upside here for the dollar versus yen, and we're back above that 130.38 level in trading here today. This swing area now becomes a focus between 131.24 and 132.02 if the price is able to get above that level, and then above the 50% retracement of the 2022 trading range from this low to this high right here. That 50% retracement level comes in at 132.70. That would be a next key target to get to and through if the buyers are to take more control of the daily chart. Right now, we survive the break below the low going back to August of 130.38, and we're going to be watching that as a close support. And we're into this swing area between 130.124 and 132.02 on the daily chart. Let's break it down off the hourly chart and see what that is telling us. See what the price action is telling us there. And when we look at this hourly chart, here is the break below the low price for the year, or for the going back to December 20th. Now, in trading yesterday, as you can see, we came down, retested that level right through here, bounced off of that level in early trading here today, and then fell below that level, increasing the momentum to the downside. And as you can see, we're trying to hold support against that old low for the year. That old low, or for the month of December, that low from December came in at 130. I got to get it 130.55.6. So let's make sure that is the right level here. That's about right where it is. So the line here is 130.55.6, and as you can see, the price is coming back down toward that level. That's going to be a key barometer here for intraday trading for the dollar versus yen. We had a low here, we broke below it right through here, and then moved back above it. And as you can see, we're trying to hold support against the level right now. As if the price is able to hold support against that level, then we could see a rotation, a further rotation back to the upside. If we break below it in the short term here today, we could see a rotation back to the downside on the failure of the ability to get back above that level. So watch those levels in the dollar versus yen. Let's take a look at the sterling versus US dollar next. Toward the end of the year, we saw the ups and downs above and below the 200-day moving average. So the market was just trying to make its way through the end of the year. And in trading here today, we moved sharply lower, helped by those natural gas prices, low inflation in Germany, so on and so forth, that helped to push the euro versus US dollar. But you can see the price has started to rebound back to the upside. Let's take a look at the hourly chart for this currency pair and see what that is telling us. And if we break down the break down this chart, we did fall below the low price of, again, from earlier in December. This is December 22nd where we had the low in that, and you can see the consolidation here into the year end with the price moving above and below the 100 and 200 hour moving averages in sort of a random fashion. And trading here yesterday, the market did move back below the 200 and stay below that level and then work below there. But in early trading in Asian session, we did move back above those moving averages, only to fall to the downside as the inflation, preliminary Germany inflation numbers, and all the other moves that sent the dollar higher started to move into place here. We saw the sharp fall to the downside, but we are seeing a rebound back to the upside. That's taking the price back above the 119.91 level, that low price from December 22nd, and that's going to be our short-term barometer in trading here today. If the price can stay above that level, it would be more. It give the buyers at least some hope for further upside potential here. On the top side, watch this level as well. As you can see, these lows through here over the last few trading days did form sort of a floor here at the 120.10 level, and that is where the price stalled out on the top side in trading here today. So get above that level, stay above this level right here, 119.91, move above the 120.10 level, and then move toward the 200-day moving average, 100-hour moving average, 200-hour moving average. All these moving averages, cluster of moving averages here between 120, 35 and 120.54. Those would be the next key targets to get to and through if the buyers are to take more control. Again, early today, the price did try to move above that. Yesterday and on Friday, the price tried to move above those levels. At this point right here, the price did fall against the 200-hour moving average. So with them all clustered here together, that is going to be a level that we're going to need to get to and through in order to push the bias more to the upside. So there you have it, a look at some of the major currency pairs. Again, wishing you a happy new year and good fortune to trading this year. My name is Greg Michalowski. Bye-bye now.